The Reserve Bank pauses on interest rate hikes, sending markets higher. Alcohol giant Lion to take full control of Australia's biggest gin company. And Facebook parent Meta set to launch a competitor to Twitter. It's Wednesday, the 5th of July, 2023. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, big 24 hours in news.
Yeah, it sure has been. And from all over the place, from alcohol companies to interest rates to social media giants, great day's news.
And gin as well. I'm looking forward to that one a little bit later on. You've got a great chat coming up with Stephen Halmarick, the chief economist at the Commonwealth Bank.
All about yesterday's decision by the Reserve Bank to not lift interest rates, but Stephen takes us behind the words that the Reserve Bank puts out and tells us not just how he interprets that, but what the Commonwealth Bank is seeing in their data, their credit card and debit card data, and what that means for the economy, what's happening in the housing sector. It's a great chat.
Yeah, it certainly is. It's coming up a little bit later on, and that is, of course, the main story this morning. The Reserve Bank of Australia has left the official cash rate on hold to give itself some time to assess what's going on in the economy, but it still has a bias to hike rates in the future.
This is the second time the central bank has paused in the last 3 months to go alongside the 12 increases since May last year. And it does demonstrate that we are getting towards the end of the rate increasing cycle. Governor Philip Lowe said the decision to keep rates on hold at their highest level since April 2012 will provide time to assess the impact of the increase in interest rates to date and the economic outlook. He said that higher interest rates are doing their job, better balancing supply and demand in the economy. And he also said it's clear that some households are experiencing a painful squeeze, is how he put it, on their finances. But he added that further rate increases might be needed to get inflation, which is currently running at 5.6%, back to its 2 to 3% target range. Lowe said the Reserve Bank board is alert to the risk that higher inflation could trigger increases in prices and wages, and that will occur if expectations of higher wages become embedded. As a result, the bank will keep a close watch on what happens to labour costs and the price-setting behaviour of companies.
I tell you what, Sean, I reckon you heard pretty much a collective sigh of relief from households struggling with increased mortgage repayments at about 2:30 yesterday afternoon, and it was quite possibly led by the Thompson household.
No doubt. I mean, people really are under pressure, and it's not just interest rates, it's energy prices, it's petrol prices, all sorts of things. So I totally agree. I reckon much of the economy would have been very, very relieved yesterday afternoon.
And Governor Lowe also went into some detail about why he dislikes inflation. This is interesting.
It is, and it's important to remember why they're actually doing this, because you can say, let's cut interest rates, let's not worry about inflation too much. But he really was at pains yesterday to explain why that is a bad long-term outcome. While he believes inflation has peaked, it's still too high and will remain so for some time, according to Phil Lowe. As he put it, high inflation makes life difficult for everyone and damages the functioning of the economy. It erodes the value of savings, hurts household budgets, makes it harder for businesses to plan and invest, and worsens income inequality. And if high inflation were to become entrenched in people's expectations, it would be very costly to reduce later, involving even higher interest rates and a larger rise in unemployment. The bottom line after yesterday, Michael, the Reserve Bank kept interest rates on hold, but that doesn't mean there won't be more rate hikes, but it does, in all likelihood, mean that there won't be too many more rate hikes.
Sean, there's been a lot of pressure on the Reserve Bank lately and on Phil Lowe. Do you think that these efforts to kind of explain the dangers of kind of high inflation is all kind of part of that, just making sure that there is as much transparency and as much explanation and as much kind of detail around these decisions as possible?
Yes, I think in recent months they've been trying much harder to provide more information, and the review of the Reserve Bank certainly suggested that it needed to improve its transparency. That was handed down a couple of months ago, and they're already starting to do that. Now, whether Phil Lowe has a job after September, who knows? But in the meantime, they're trying to explain themselves better.
Yeah, and it's certainly useful. Yeah. Isn't it? It really kind of paints that more complete picture of the situation that the Reserve Bank is grappling with at the moment. How did local markets respond yesterday?
The S&P ASX 200 got a boost after the 2:30 p.m. announcement and went from negative to positive territory. By the close, it was up 0.5% to finish at 7,279 points. The energy stocks did well, so too some of the interest rate sensitive sectors like financials and real estate. Commonwealth Bank led the way, jumping 1.3%. National Australia Bank, ANZ and Westpac were all up more than 1%. Woodside Energy also outperformed, as did the gold companies Newcrest Mining and Northern Star Resources. Among the underperformers were Brambles, Fortescue Metals, Rio Tinto, BHP, Wesfarmers and Telstra. The battery metal stocks did pretty well, while the worst on the day was Domain, which fell 3.4%, and the Star Entertainment Group, which dropped more than 2%. Bond markets reacted quickly to the interest rate announcement yesterday, Michael. They're now pricing in a 60% chance of an increase in 4 weeks' time at the August Reserve Bank board meeting, and a 90% chance that rates will be higher by the September, or at least by the end of the September board meeting.
That's a little ominous. What about international markets? What's happening?
Global equity markets have done pretty well in recent months, led by big US tech stocks and Japanese equities, but there just seems to be a little bit of a lull at the moment, reflecting the uncertainty around interest rates, inflation, economic growth globally. Wall Street, of course, was closed overnight for the July 4th Independence Day holiday, while markets across the region from Japan to South Korea and Hong Kong just struggled a bit in the last day or so. In commodity markets, Saudi Arabia and Russia said they'll extend cuts to the amount of oil they produce in an effort to prop up prices. As a result, the price of crude rose somewhat. The Aussie dollar also fell following the Reserve Bank announcement yesterday afternoon, though it very quickly made back ground. It's currently trading around 66.8 US cents.
All right, we'll be back in a moment with the rest of the day's business news. Sean, Indonesian President Joko Widodo yesterday met with Prime Minister Anthony Albanese under pretty grey Sydney skies, with talks centring around trade and investment links.
And top of the agenda is green technology. Indonesia wants to become a manufacturer of green products like batteries, and it also wants to become a greener economy. Australia has plenty of raw materials like lithium to help our neighbours succeed. Defence issues such as the AUKUS partnership and tensions in the region are also part of discussions. Widodo is spending 3 days in Australia, and yesterday morning met with chief executives at a CEO forum. Also yesterday, Prime Minister Albanese announced an easing of visa requirements for Indonesian business people wanting to come to Australia.
Foreign Minister Penny Wong says the government will support people exercising their right to freedom of speech after Hong Kong officials placed a bounty on an Australian democracy campaigner.
Yeah, so Hong Kong police have offered rewards for the arrests of 8 overseas-based activists after accusing them of national security offences. The activists include Australian Kevin Yam. Wong said she had expressed Australia's concerns about the far-reaching national security laws in Hong Kong and their very broad application. The senator said the government will support individuals who express their political view peacefully. Reports say that Hong Kong police have issued arrest warrants and bounties worth 1 million Hong Kong dollars for Yam and another Australian resident, Ted Hu. Now, that's about 200,000 Aussie, these bounties. Somewhat disturbing that they've been issued.
Yeah, certainly is. All right, Sean, a New York private equity firm has bid $1.6 billion for Costa Group, which is Australia's biggest horticultural company.
Payne Schwartz Partners made the $3.50 a share bid at the end of May, and when the bid was confirmed yesterday, Costa's share price jumped 13%, though it's up substantially more than that since late May. Costa said talks with Payne are expected to continue through most of July. The group also provided a trading update yesterday, saying the return of warmer weather and lower rainfall is a positive for its operations, which include growing citrus, berries, avocado, tomatoes, grapes, and mushrooms.
Yeah, after not seeing a huge amount of M&A activity, feels like this particular company could be kind of fertile ground. Maybe we'll see some green shoots. That was bad, wasn't it? It was 2 in 1. It was like a bonus for you in there, and I don't think either of them were worth it.
Yeah, I was trying to go with you, but the further you went, further I couldn't.
The more regret I had. Anyway, staying in that sector, Sean, which I think we just want to get away from that sector right now after that shame, but the Rural Bank's Australian Agriculture Mid-Year Outlook was released yesterday, and it forecast that expected total production this year will come in lower than last season.
The drier weather post-La Nina isn't as good for most rural producers, it seems. In the world of cattle and beef, restocking will ease somewhat over the next half year, while rising supply will put some downward pressure on prices. Hopefully that means that beef prices will be somewhat lower for we consumers. A similar story in the sheep sector. Dairy prices remain near record levels due to weak production levels. In terms of crops, most regions across the country have been able to sow seeds in the first half of the year, though an expected dry winter and spring will hurt production. And in horticulture, rising supply and strong export demand should drive a record production value, even if prices have come off a bit.
All right. Now, a program helping low-income families access vehicles will be offered for another year after demand for the scheme jumped by more than 30%.
It's not huge, but it's really interesting. The federal government announced it would invest another $500,000 in the pilot program run by Good Shepherd Australia to fund no-interest car loans. The scheme provides 4-year loans to motorists on low incomes, those with health or pension cards, and domestic or family violence victims. The loans of up to $5,000 can go towards cars, mobility scooters, motorcycles, or fees associated with keeping vehicles on the road. Social Services Minister Amanda Rishworth yesterday said the additional funding is designed to help more Australians get to work, access medical care, or undertake caring responsibilities.
Yeah, it's a good story. Now, this is a good one as well, Sean. I mentioned it at the top of the show. Brewing giant Lion Group will buy the 50% of Four Pillars gin that it doesn't already own as it pushes into the premium spirits category in Australia.
Lion, which of course is behind names such as Forex, Furphy, Little Creatures and Tui's Beer, is owned by Japanese giant Kirin, and it's believed to have purchased the 50% stake in Four Pillars that it doesn't own for about $50 million, according to the Financial Review. It initially acquired half the gin business back in 2019 for about $40 million. Four Pillars is a great little story. It was founded in 2013 by Stuart Gregor, Matt Jones and Cameron McKenzie out of Melbourne. Gregor will leave the business on September 1 now after the deal, while Chief Distiller McKenzie and Brand and Strategy Director Jones will stay in their roles. The distiller is on track to sell 1.2 million bottles of gin this year, more than double what it sold in 2019. The boss of Lion said premium spirits are a source of future growth. At a time when beer sales are under pressure, no wonder they're interested in Four Pillars. It's now sold in over 25 markets and has a really significant presence in travel, retail and duty-free stores. In fact, Michael, Four Pillars is actually the number 2 selling gin in Singapore's Changi Airport.
Oh, that's not bad.
And that's a huge airport and would have huge sales.
Certainly would. Stu Gregor actually spoke to you 2.5 years ago. Can you believe it's that long?
When it was? Wow.
Since he was on the show. And what I might do is I'll put a link to that interview in the show notes for today, because he's such a good storyteller about how this business grew from nothing and how now it is kind of being bought by this giant. And it's such a fantastic story of a really good Australian brand. So I'll put that in the show notes. Well worth a listen. International news time now. Sean, China has imposed restrictions on exporting 2 metals that are crucial to parts of the semiconductor, telecommunications and electric vehicle industries, escalating the trade war with the US and Europe in technology.
One thing I do like about these stories is I learn new stuff. So the 2 metals, one is called gallium and the other one is called germanium.
They're good names.
Yeah, gallium and germanium.
Wouldn't it be cool to have an element named after you? Thomsonium.
I don't know where to go with that. Thomsonium.
It could happen. I mean, obviously, I know nothing about kind of chemistry and...
I'm trying to think of an equivalent. Almagen.
Almagen?
Yeah.
I think Thomsonian's got a ring to it. Almagen. Yeah. Anyway, please go on, Sean. I'm sorry, I've hijacked this.
Yeah. Anyway, so gallium and germanium, along with their chemical compounds, will be subject to export controls meant to protect Chinese national security starting the beginning of next month. Now, China's a dominant global player of both metals. They have applications for electric vehicle makers and the defence industry in particular. They play a role in producing a number of compound semiconductors which combine multiple elements to improve transmission speed and efficiency. I half understood what I just said, but I've thought a lot about it, but I'll keep going. They're not really rare, but they can be quite high cost to extract. Like we talk about rare earths. Rare earths aren't rare, but they're very expensive to get out of the ground, and China's really good at it. China, of course, is battling for technological dominance in everything from quantum computing to artificial intelligence and certainly chip manufacturing. The US is taking increasingly aggressive measures to keep China from gaining the upper hand. It's called upon its allies in Europe and Asia to do the same. These restrictions yesterday will not be appreciated in Washington.
Ailmeronium, I think.
Ailmeronium.
That's what I think. That works well for you.
Yeah, I think so.
Sean, I'm sorry. I was listening.
No, you were thinking the whole way through that. You were thinking...
I was workshopping your chemical compound. I'm sorry.
What would Adam Lang's be?
Langsteinium.
Yeah, you almost have to say Langside or something like that.
Oh, that's good. Langside.
It sort of suggests there's a bit of a poisonous element to it.
Ooh, savage. We will raise this on the weekend edition.
We will definitely.
Oh, yes. I'm sure he will have some thoughts. This next story is a bit of a worry. I mean, that story was quite concerning. This one is a bit of a worry, particularly for those of us who enjoy chewing gum, like I do. The World Health Organization will declare one of the world's most widely used artificial sweeteners, which is found in thousands of sugar-free foods, from soft drinks to jelly and, of course, chewing gum, as potentially cancer-causing in coming weeks.
Aspartame will be deemed possibly carcinogenic to humans by the World Health Organization's International Agency for Research on Cancer, Reuters has reported. Aspartame, which is sold off the shelf under brand names including Equal and NutraSweet, is very popular with food manufacturers because of its very high levels of sweetness and low calorie count. It's made by combining two naturally occurring amino acids and was discovered in 1965 by a chemist named James Schlatter in the US. Apparently, Michael, he was researching anti-ulcer drugs and licked his finger, which was coated with the compound, thereby discovering its sweetness. I digress. Now, the sugar substitute is found in thousands of products, from Coca-Cola and Pepsi to the chewing gum that you chew 24/7, Michael, lollies, all sorts of things. But on July 4th, the International Agency for Research on Cancer is expected to highlight its cancer risk.
All right. One last one, Sean. Meta, which owns Facebook, Instagram, and WhatsApp, is expected to launch its own rival to Twitter called Threads in coming days.
Similar to Twitter, it will be a text-based platform on which users can publish posts that can be replied to, liked, or shared, according to a story in the Financial Times. Threads will be directly linked to Instagram, with users able to easily port their username and followers to the new app. It's unclear what the exact scope of the rollout will be and whether the app will also be launched on Android. Threads represents a direct challenge to Twitter and comes as many users have sought alternatives to the Elon Musk-owned platform since he bought it late last year. Now, there have been other platforms that have sought to win over disaffected Twitter users. Jack Dorsey's Blue Sky is one, Donald Trump's Truth Social is another, but they really haven't gained a significant user base yet. Meta does have a track record of deliberately cloning rivals in an attempt to defend its market share. It took on Snapchat, creating its own version of disappearing vertical video clips. More recently, took on TikTok, pushing its new short video format called Reels. Be very interesting to watch this one. Threads coming your way.
All right. Up next is the Fear and Greed Daily interview, and you are speaking today to Commonwealth Bank Chief Economist Stephen Halmarick.
Yes, all about the Reserve Bank's decision yesterday, plus more, where the economy's up to. And of course, when you're the chief economist at the Commonwealth Bank, which would have more data on what's going in terms of money flows, more data than any other organisation, you tend to know a fair bit about what's going on. So, well worth listening to Stephen.
Yeah, it sure is. He's coming up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. And today is Wednesday, Sean.
How can I forget that? No, that's not it. How do they afford that?
It is indeed a new episode of How Do They Afford That? And today, speaking with Canna Campbell, financial planner and founder of Sugar Mama TV, all about financial planning, basically what to look for in a good financial planner, kind of how much you can expect to pay, and also some of the kind of low cost options like robo advice and things, just basically how to make sure that the maximum number of people can actually get access to advice. It's a really good chat, and it's one of the questions that we actually get asked quite a bit, kind of who should I be speaking to? How much is it going to cost me? And we just kind of work through all of those things. How do they afford that is out every Wednesday, and we'll put a link to that in the show notes as well. Big day, Sean.
Very big day. Very interesting day.
Yeah, it has been. Thank you very much.
Thanks, Michael.
It's Wednesday, the 5th of July, 2023. Make sure you're following the podcast. Join us online on LinkedIn and Instagram, Twitter and Facebook. And if you didn't see our picture of our Fear and Greed colleague, Adam Lang's souffle, which is on our Instagram now, make sure you go and check that out today. It won't necessarily change your day, but it might just make it a little bit better. Make sure you stay up to date on all the business news with Alexa and your Amazon Echo smart speaker. Simply say, Alexa, play the Fear and Greed podcast to catch the latest episode. You can grab yours now at amazon.com.au. I'm Michael Thompson, and that was Fear and Greed. Have a great day.